I was earning less than $2 an hour, working day and night just to make ends meet. I wanted to be rich so badly, but felt like it was never going to happen to me. Little did I know, there were some clear signs that I was going to become rich, and I've seen this time and time again over the years when helping others achieve their goals. In the past, I've used these signs as a little checklist to see if it's worth mentoring someone. So grab a pen and paper and let's see how many you have. Let me know in the comments if you check all 7. Number 1, you know that the phrase, money won't fix your problems, is a load of rubbish. There's nothing worse than someone rich saying, money won't fix your problems. Trust me, I've been there. You see, I believe there are 2 different types of problems we all face. The first type is your basic needs. These are things like water, housing, healthcare and food. Now, if you're facing the first type of problems, then the answer to all of these is clear. You need to earn more money. Everything you're stressing about can be solved with more money. When you fix the basic needs, your focus shifts onto type 2, which is the abstract problems. These are things money definitely can't fix, such as love, happiness and fulfillment. For me, that's always been about spending time with my family, enjoying my hobbies, my interests, and running a business that I'm truly passionate about. So you can definitely be broke but happy. You can also be rich but sad. However, wouldn't you prefer to be rich and happy? The puppet masters have brainwashed everyday people into believing that they don't actually want money, all while they trade years of their life working a job they hate for a tiny salary. If I see that someone actually buys into the thinking that money isn't desirable, then I can't see how they're ever going to make enough to be rich. Even when I was completely broke, I didn't ever think this way. If you're able to ignore all of this, then you're on the right track. Number 2, when you see an obstacle, you overcome it. Successful people focus on the opportunities rather than the things holding them back. Now is one of the best times to start a new side hustle, as there are so many different industries booming online. Let's say you have the most amazing business idea that has the potential to make you millions of dollars, but you never act on it because too many things are standing in your way. How much is that idea actually worth to you? Well, the answer is absolutely nothing if you're not going to work on it. Have you ever chatted with a friend and they say, you know what, I've got the best business idea in the world. They're extremely motivated, certain that this will make them richer than rich itself. You then meet up with them 6 months later down the line and you ask them, how's everything going? And you're really excited for them. Oh, I haven't started yet. And the reason is, oh, because the government, my job, the economy. They've got excuse after excuse. The list goes on and on. When most people see a problem, they say it's bad luck. They quit and they stop trying. When rich people run into problems, they might scratch their heads for a while, but they don't give up. They strike when they have the most passion and the most motivation. The longer you leave an idea stuck up here in your head, the longer you'll have time to convince yourself that it'll never work. So if you're the type to just get going and sort the problems as you go, then there's a high chance you'll become rich. Number 3, you prioritize buying assets when possible. When was the last time you thought about buying something and took the time to decide if the item was going to help bring money into your life or drain money away from your life? We're constantly living on a seesaw. On one side, you've got fancy cars, designer clothes, and unnecessary gadgets. On the other side, we've got rental properties, watches, and stocks. By taking advantage of when the economy is on its knees and buying up lots of long-term assets, you could easily set yourself up financially for the rest of your life. The first $100,000 is the hardest money you'll ever earn. The truth is that getting your money to work for you and not the other way around is the only way to achieve real long-term wealth. I'm sure you've heard this before. However, I know that sometimes it can feel less scary just letting your money sit in a savings account rather than investing it elsewhere. If this is how you feel, then money market funds might be a good option for you. They normally have better interest rates than savings accounts while not being as risky as investing in stocks. Instead, these money market funds invest in high quality, short-term debt from governments, banks or corporations. I like investing some of my money in these funds on Lightyear because I can easily draw it out when I need to rather than having to worry about the ups and downs of the stock market. The interest, otherwise known as the yield, is paid into my account on the 1st of every month. However, the interest amount does change daily, so it's not super predictable, just like the British weather. You can do the same if you live in the UK or one of these countries, because on apps like the one I just mentioned called Lightyear, you have access to AAA rated BlackRock money market funds and can start investing from just £1, euro or dollar. So if this interests you, feel free to use my code Tilbury to get a free $10 fractional share when you sign up for Lightyear. Using this affiliate link and code is also a great way to support this channel, as I'm able to put the commissions we receive into creating more videos. And let me remind you, investing always carries a risk, and the value of any investment can decrease as well as increase, so be sure to invest wisely and do your research. Number 4, you know there is so much more to learn. How many people do you know that when they have a couple of days off or during the evening spend all their spare time playing video games and watching Netflix? I'm willing to bet quite a few. Look, there is nothing wrong with binging a TV series once in a while. I'm talking about the people that don't watch or read anything educational. They falsely believe that education stops when you leave school. To be honest, these people are extremely arrogant and they don't know it. They think getting rich is down to luck, because they haven't learned enough to spot the strategic steps that every self-made millionaire takes. They would rather critique others and then escape to a fantasy land where they don't have to think about their problems. But you know what? I'm going to be sharing with you all the strategies that actually work for me, as well as lots of my mistakes, so hopefully you can do even better. This is the story of how I went from a small English town to the rolling hills of San Francisco and the bustling city of Shanghai, China, including all the challenges I faced along the way. Who knows, by watching this video to the end, it may open up a new pathway for you that you might want to walk down. You'll also find out why a simple desk like this can mean so much to me. If that sounds good, then give that like button a smash and strap in for the wild ride that is my life. Let me take you back to 1985. That's the last time I walked out of those gates. I was 16 years old, I was tall, skinny, and I had ginger hair. And I was broke, unfortunately. But I knew I wanted to make my mark on the world, and there was no way I could do that sitting in lessons, learning about things I wasn't interested in. So I went out to seek my fortune. But before we get there, let me take you back to my teen years. I was always looking to make money. I know it's a little cliche, but when I was a teen, my main side hustle was selling candy and cans of soda to all the other kids in the playground. On the weekend, I would also go fishing and catch hundreds of mackerel, which I sold around the neighbourhood. I remember knocking on every single door possible. I was offering a great deal, 10 fish for $1. But unfortunately, no one wanted 10 fish. So I was forced to go back to the drawing board and restructure my business with a new strategy. I decided from now on I'll be selling 5 fish for $1, and I was shocked by the results. Everyone wanted some. Looking back now, these years were so important, as I was practicing some of the most important life skills out there: sales and confidence. Without these skills, I don't think I'd have been able to achieve success in later life. So if you just take one thing from this video, then it should be to start honing your sales skills and being confident. This brings me back to these school gates. When I left here, I had several paths that I could follow. I decided I wanted a 9-to-5 job. I needed to learn a skill that would set me up for life. Going to work at 9 AM and finishing at 5 PM was the life that school had been drilling into me for years. So I really threw myself into it and actually lined up 5 different jobs because I was so keen to be successful. I had the choice between being a builder, an electrician, a refrigeration engineer, a shop assistant, or a carpenter's apprentice. It was a tough decision, but in the end, I decided on becoming a carpenter. The pay wasn't great at around $2 an hour, but I was learning a skill and I could see the potential for moving up in the company, and I really thought that this was my ticket to success. I really threw myself into my carpentry apprenticeship and I learned everything I could. I even won leadership awards, and I really felt like I was moving forward with my life. I finished my apprenticeship with honours from the college and thought, here we go. All the big jobs are coming my way. But unfortunately, my manager seemed to take a dislike to me. Maybe he started to feel a little bit threatened by my success and therefore decided to give me all the bad jobs. For months on end, he assigned me to making wooden trash cans in the back room. This gave me no ability to show off my skills that I'd learned and prevented me from working my way up the company to a higher paid job. I thought to myself, I hadn't really studied all this time to make wooden trash cans. Nowadays, it's a sort of repetitive job, a robot would do. What was even worse is when I looked around the workshop, I saw many other people doing lots more interesting jobs. So I asked to speak to the manager, and where we're filming this is the exact spot where we stood. I said I needed more of a challenge. I couldn't keep making these bins. And you know what he said to me? He said, you're making these bins today, you'll be making these bins tomorrow. We got a 5-year contract with Walmart. You're going to be making a lot of these bins. Now that's when I realised I was completely powerless working a 9-to-5 job at the mercy of whoever was in charge. The pay was only just enough to cover my bills, which meant I couldn't just quit, but I was also unable to save any money. I was essentially trapped. So I got a Saturday job working in a radio control model shop. I also started a side hustle flipping cars, which basically consisted of finding underpriced cars, fixing them up and then selling them for a profit. To this day, I still own this Ford Fiesta XR2 Mark I. It's a 1985 model, and the cars I was buying at that stage were costing me $200 to $300, and I was usually flipping them for I say $500 to $600. This little beauty's worth a little bit more than that now though. As well as doing all of this, I was also teaching people to fly radio controlled helicopters on a Sunday. There was a huge demand at the time, and all Sunday I would be booked out as long as the weather was good. Having these multiple side hustles allowed me to finally build out some kind of emergency fund. This is so important as it gives you the freedom to take advantage of any opportunities that come your way without having to worry about paying your bills. There is a huge opportunity cost that comes from living paycheck to paycheck, as you're so focused on next month's wage that you end up going through life with your eyes half closed and passing up on many opportunities without even knowing it. One day at work, the boss asked if anyone wanted to help install this beautiful staircase at a customer's house. I jumped at the chance. It was one of the most impressive houses that I'd ever seen. It had everything. I'm talking marble floors, chandeliers, a private swimming pool and a garage full of beautiful sports cars. It was my dream house. I started daydreaming and adding up how many years it would take me to earn enough money to buy a place like this. And I got gradually more and more demoralised, as even with all my side hustles, I realised I still would never have enough money. It was so close, but just so far at the same time, and I felt there was really nothing more I could do to achieve it. I was absolutely exhausted, physically and mentally. I was working every hour of every day. While installing the staircase, I would often look out of the window and see the owner relaxing in the garden or going off to play golf, and I really couldn't understand how this guy managed to have the life that he wanted and go and have fun whenever he wished. So I had to ask him a few questions, and he told me all about how running his business gave him the ability to make money while he slept. This is when I first discovered passive income. I'd never thought this was really possible for me, as school had only ever taught me one way of making money, and that was working a normal job. This concept of making passive income was so alien to me, but it really got the wheels turning in my mind. If this was a normal guy and he was able to do all this, then I was pretty sure that I could do it too. I started thinking back to my school years and selling those fish. That was my first real experience of running a small business, and I'd loved every second of it, from sourcing to selling the product. I couldn't believe that I'd been suppressing this for years and trying to conform to what society wanted me to do. Nowadays, passive income has become a bit of a buzzword on the internet, and I don't completely agree with the term, as it can sound a little misleading. Kickstarting passive income is certainly not an easy thing to do, but the idea is that you can do something once, like setting up a business or investing some money, and then earn from it even when you're not working. Of course, this requires some maintenance, but in my opinion, it's a better way to make money than working a 9-to-5 job if you want to be successful when you're younger, as your time is limited and therefore your income is capped. So now I knew that passive income was the answer. I devised a plan of escape. To have the best chance of success, I knew it was important to create a business in an industry that I was both familiar with and also passionate about. And I was lucky, I had the perfect idea. The shop I was working in on Saturdays was a radio control model store. Over the years that I'd been working there, I spotted lots of things they could be doing differently and all the mistakes that they were making. I researched and found the perfect location for a store. I even came up with the perfect name, which was inspired by an old TV show I used to watch when I was younger, Model World. I could really see the potential with this shop and how it would eventually operate without me even having to be there, essentially creating passive income. It finally gave me some hope and direction while I was working my normal job, as I knew that it was now only a temporary situation. Unfortunately, not a lot of people believed in me. I came from a working class background and I had little to no qualifications, so no one thought I'd be able to break into the market, except for one of my friends, who I told my entire plan to. I couldn't wait to quit my job and get started, so I could prove everyone wrong. I just needed to get enough money together first. Within a few months, Model World shop was up and running. But it was nothing to do with me. My friend had stolen my idea and done it himself. I felt so betrayed and frustrated that I'd trusted him with all my plans. I even started thinking to myself that maybe being an entrepreneur wasn't actually right for me. I was stuck in my 9-to-5 job being ordered around by my manager with every bit of hope shattered. The worst part was watching my friend living my dream. I felt like a sprinter chained up in the starting blocks, unable to release all that energy. It was one of the worst feelings in my life. The whole future I built in my head started to come crashing down. Looking back, this was a great life lesson for me, although I didn't see it like that at the time. If you have a great idea, then it's best to operate in the shadows. Maybe tell parts of your plans to different people, but don't give the whole game away like I did. After this huge setback, I decided to pick myself up and keep working. I grinded as hard as I could and bought my first apartment to build up my credit score. I thought I was working hard before, but this was really the next level. I worked every hour under the sun, as I wasn't going to let my financial situation leave me open to having my dreams taken away from me again. This just shows the path to passive income is by no means easy. There can be a lot of setbacks along the way, but if you stay focused, then opportunities will present themselves. As if by magic, one day I heard some great news that my friend wanted to sell Model World. I'd visited a few times and noticed that he wasn't giving it the attention it needed. It had huge potential, but his passions were not in the business. I knew I needed to buy the shop and get my dreams back on track. This was the opportunity that I'd been preparing myself for, and I wasn't going to let it slip through my fingers again. I had a little bit of money behind me, but it still wasn't going to be enough. Nowhere near enough. But I'd built up a good credit score, so I thought, I know what, I'll leverage the money I had and see if I can get a bank loan. He'd taken my great idea, he'd taken my name, but the one thing he couldn't take from me was my passion, and I knew that was the secret ingredient to making this business a great passive income generating machine. So I created the best business plan I could and got a meeting with the bank. I'd banked there since I was a kid and I had a good credit score, so I was hoping that everything would go smoothly.
Within 10 minutes, I'd been denied the loan. It was the worst interview of my life. I felt like I'd been kicked out of the bank. It was unreal. My head was down. I was walking back to my car. And do you know what? I really didn't know what to do. It was like being back at that house again. So close, yet so far. I had to pick myself up. And as luck would have it, the next building I stumbled on was this bank here. I hustled my way in and I got a meeting right there and then with the manager.
He actually said it was a very interesting idea and not only gave me the loan but promised to be one of my first customers. I have since asked him what made him take a chance on me, and he said he was always eager to help out the younger generation, and when he saw how passionate and hard working I was, he just couldn't say no. This is a perfect example of where preparation and resilience meets opportunity. You never know when your next stroke of luck is around the corner, and for me it quite literally was just around the corner. So without any hesitation, I closed the deal on Model World, the rights to the name and all the products they had. It was finally mine. I knew the hard work was yet to come, but it was mine. The first day I opened the shop, I had a sleeping bag behind the counter because I knew if I didn't make enough money that day, I'd be sleeping there because I certainly didn't have enough gas to drive the car home. Luckily, the first day was a great success. All the selling and negotiation skills I'd learned when I was younger came in really useful. Without them, I wouldn't have been able to make my business profitable.
After 3 years, we'd turned over $1 million, and it was crazy. It was crazy times, but it was good fun times, and we had more challenges along the way. After 10 years, we had 3 shops and a warehouse stuffed full of gear, but we wanted to be number one, so we had plans to push on even more.
I was generating millions in passive income and I felt like I'd finally made it, but I didn't realise just how open I was to losing everything. When it seems to be going amazingly well, you can start to get a little complacent as it seems like nothing can stand in your way. This is really dangerous as you stop innovating and take your eye off the ball. I was who sold over $5 billion worth of cars to the rich and famous, making him Britain's top supercar dealer.
I wasn't learning at school, I was called a dunce. Couldn't read. It was always my desire and my dream to be the most famous and the best at what I do, and that's exactly what we are today. This complex cost 10 million. The lighting system was 300,000, the lift was 275,000. This building's made with handmade bricks, £2 a brick, £2 a brick. We can at any one time carry stock from 40 million to 100 million. Money's not everything. Well, everywhere I go, money's everything. I founded this business on my own back. The business is worth well over 300 million today. As a mature man yourself and a successful person yourself, you're going to get doubters in life, and if you can't handle rejection, you're never going to make it in life.
This is the story of how a young man went from nothing to becoming a millionaire, only to lose it all and then go bigger and better than before, with his estimated net worth now sitting at around $1 billion. Right, so today we're setting off to visit Tom Hartley. He sent me the address to his estate and I'm not really sure quite what to expect, but I am certainly very excited. I've always put my success down to passion, as I believe this is the key to pushing yourself past your limits in business and in life as well. So I'm really interested to see what Tom thinks. The next time you see me, I'll be sat down with the man himself.
So did you ever feel different to the others at school?
I wasn't learning at school, I was called a dunce. I couldn't read, I wasn't interested. And I was told by a school teacher called Mrs. McDonald that I was going to struggle in my life. I'd start dodging school, and a friend of my father's who owned a taxi business, he was taking me to the auctions, and I'd watch what was happening because I was interested in watching cars be sold and bought and how auctions worked. So the first deal I'd done, I was just before I was 12 years old.
So you sold your first car at 12 years old?
I bought and sold my first car at 12 years old. I bought it from a guy called Billy Barty. He had a new Range Rover coming, and it was £1,950. I also knew a relative of my father's who wanted to buy a new Range Rover, and you couldn't get them. I put the deal together. It's called supply and demand. And I earned £250, and it was a lot of money. £250 in 1971 was a lot of money. And that was the start of the journey. So some of the heritage here, over the years, I've enjoyed.
They're amazing, aren't they?
Yeah, you name anybody you want to name, they've all been in this office. There's no computers on here. It's a telephone, piece of paper and a pen. That's what I rely on. Everybody from Andrew Lloyd Webber to the Sultan of Brunei, Rod Stewart, Elton John.
Yeah.
They've all been here, they're all there.
So when you were a youngster, could you really see that you'd have all your family around you as well as these beautiful showrooms?
Yeah, I mean, I had a vision of that, and I'm living it now. I'm living my dream. My son Tom passed his driving test in a Ferrari, and they set up the full television station here and filmed it live.
Amazing.
From here.
Yeah.
Going away and coming back. He's 17-year-old.
So would you say the drive to be the best you could be is what pushed you forward?
Like everything in life, to be successful, you have to take risks. I broke a few rules at that age. I drove on the road at 14.
So did you get stopped by the police at all?
Yeah, I'd been stopped. I was 14, I drove a Rolls Royce. Back in the 70s, guys, when you got stopped by the police, the routine check is nothing like it is today. You could give your name to be Peter Johnston, 17 Main Street. They took that name and address down, and they said they'd write to you, that was it. You never heard no more. Because I was in such a rush to get to where I wanted to get to in life and in business, with the ambition that I had and the dream that I had. I wanted to get there quickly, and I had to break some rules. I discovered a loophole in importing cars. To an extent, it was like a cartel in the business. I was importing at that time probably 10 or 15 cars per week. When I was importing cars in 1978, you got 4.5 Deutschmarks to £1. So the point I'm making for you who can't calculate, I was able to buy cars from the factory, import them, and sell them to dealers in this country. It was just an unbelievable loophole I found at the age of 17, just before my 17th birthday. I was a self-made millionaire.
So it's classic territory. I recognise this Porsche. I had one of these back in the day from a Wales House. 1976 Carrera.
Yeah.
And this Ferrari here,
Yeah.
is this the most expensive car you've currently got on stock?
No, we've got a car downstairs which is 3 million. This is 1.6 million.
So when you'd made that first million, was it all plain sailing from there on?
It just went crash. My world was turned upside down. I didn't lose $1 million because I gambled it or I wasted it. I lost $1 million because there was a technicality brought out because of my success. The manufacturers, the giants, BMW, Mercedes and Porsche, got together on this young kid, 16-year-old. They fetched a law out that you can only fetch one car, one person, and we're talking about a lot of money on deposit here, a big part of the $1 million. Here is a young guy who's made $1 million and lost $1 million, and he's not 20 yet.
How did you feel when these car companies started ganging up on you?
I was overwhelmed because I was out of my control.
Isn't something they teach in school. Come to think of it, it'd have been pretty awesome if they had. Because of this lack of knowledge, it seems pretty scary for most beginners to get started in investing. But in today's video, I'm going to simplify the whole process. Investing my money allowed me to become a multi-millionaire. And guess what I started with? That's right, $100. Well, probably less than that, to be honest. I'm not saying becoming rich is easy, but by taking calculated risks, you'll be able to grow your wealth over time. I understand that everyone has a different risk tolerance, so today I'm going to be revealing how to invest for beginners with $100. And as we go through the video, the risk is going to increase, but remember, as the risk goes up, so does the potential reward. I'll also be putting my money where my mouth is and investing $100 into each one of these options so you can see exactly how to do it. I'm just about to invest in something I never thought I'd actually do. Here goes. When someone asks me how they should invest $100, I usually say invest in yourself. You can do this by buying books and improving your skills, but assuming you've already done this, now we're going to be talking about the specific places you can actually put your money. Now, I'm a businessman, I'm not a financial advisor. These are just some of the ways I've invested my money over the years and they've worked for me. You can also sit back and relax because I'm not going to try and sell you anything at the end. Just remember, if you enjoyed the video, then smash that like button because it really helps push this video out to more people, and also consider subscribing if you want to grow your wealth. The first investment is a high interest savings account. This is a 1 out of 10 on the risk scale, so the lowest possible risk that you can have. Nowadays, it's extremely hard to find any savings account that will pay a substantial amount of interest, but that's not the main reason it's on the list. By putting your money into a savings account, you're actually starting to create what I like to call an emergency fund, which I believe everyone should have. This is money that you can access if something unexpected comes up, and it's extremely low risk, and by having money on hand you can avoid getting into debt and having to pay crazy fees back. I remember when I bought my first apartment, I had a minor crisis after about 2 months as the hot water system went wrong and it needed replacing. Because of my emergency fund, it saved me over $200 as I didn't have to take out a payday loan. When you leave your money in the bank, it slowly loses its value. So when I am looking for the best savings account to combat this, I look for 2 things. The first, of course, is a good interest rate, which depends on the economy mostly. The second thing is having the ability to access my money instantly. Some banks that are really worth looking at and consistently have a good rate of interest are Ally Bank, Marcus by Goldman Sachs and Citibank. I currently have an account with Marcus by Goldman Sachs and their interest rate is 0.7%, which isn't very high, but is currently one of the best available. So there we go, nice and easy. $100 deposited into my savings account. Now for gold, often referred to as a safe haven. I'll give this also a 2 out of 10 on the risk scale. Did you know that since the creation of the Federal Reserve in 1913, the US dollar has lost 95% of its value? So you're actually only left with 5% of its original purchasing power. So if you want to stop your money losing value, then maybe gold is for you. If you had a $100 nugget of gold in the year 2000, it would now be worth approximately $580. The piece of gold hasn't actually changed in size, it's still the same piece of metal, but what has actually changed is the value of your dollar and how much gold you can buy with it. Gold was actually our original currency used by our forefathers. I remember those days well. It's perfect as it can't be manufactured and it lasts for thousands and thousands of years. So if you've ever watched Gold Rush on TV, you'll know how hard it is to actually mine this stuff out of the ground. Now you may be wondering, if it's so safe, why have I given it a 2 out of 10 on the risk scale? It all comes down to opportunity cost. You have to ask yourself if you really want to just protect your $100 against inflation, or if you want to invest it in other opportunities which could make it grow a lot quicker. If you invest in gold, then then you would be missing out on these potential profits, making it a little bit risky. I would say that this is the perfect investment if you have a lot of money already and all you want to do is just protect it. There are two different ways that you can invest in gold. The first way would be to actually buy physical gold. But if I bought jewelry, I don't know, gold bars, coins and that sort of thing, I'd probably be paying too much because the person selling it would want to make a profit, which means I would be paying more than the true value of the gold itself. The alternative is to invest in gold within a broker app like Robinhood in the USA or Trading 212 in the UK. Then you're able to buy gold at its true value and have the option to sell much quicker. In the USA, I would look for the GLD ETF on Robinhood, which is one of the largest gold ETFs in the world. As of June 2020, they hold over 36.49 million ounces of gold in vaults all around the world. As I'm currently in the UK, I'm going to invest using Trading 212 in a similar share. And with just a click of a button, there you go. I'm now Mr. Goldman. If that doesn't sound exciting enough for you, then why don't you try a simple low-cost index fund? I'll give this a 3 out of 10 on the risk scale. If you invested just $100 per month into an index fund with a 7% annual return, then after 30 years, you'd have $123,000. That's the power of compound interest. You can do all of this without having any knowledge of the stock market. I remember when Warren Buffett, one of the richest men in the world, placed $1 million bet that a simple S&P 500 index fund would outperform a professionally picked portfolio of hedge funds over a 10-year period. Now, this contest wrapped up in 2017 and the results were made public. Warren Buffett had actually won $1 million bet, which really shows the power of index funds and that the everyday person can take on the pros with little to no knowledge. Imagine an index fund is like a bag of Haribo gummies. The machine in the factory puts a range of the most popular candy into one bag, so you can enjoy the best of the best without having to pick and buy each and every one individually. Now, just replace the candy with companies. That's what an index fund is. You can buy your own selection bag of the most popular companies in the world, such as Apple, Microsoft, Amazon and Facebook, and your money is split between all of them. Now let's go back to the Haribos. Imagine you left these on the side and they're open for a few days or so. They'd go hard and they certainly wouldn't taste as good, would they? But by putting them in a container, you can stop that from happening. This is very much like index funds, as if you leave them unprotected, the government will start taxing you on the profits you make. But you can protect them with a sort of container like this, which is known as different things in different countries. In America, it's called a Roth IRA, and in the UK, it's an ISA. These containers allow you to protect your money after tax, and then any profits you make are yours to keep. But because they're so good and they're so powerful, there's a cap on how much you're allowed to invest each year. So if I was you, I would take full advantage as soon as possible and max out your allowance. There are more in-depth strategies you can use, but for the purpose of this video, I'm going to be investing $100 into an S&P 500 index fund, which over the last 20 years has an average yearly return of 7%. Drop a like if you'd like a full video covering this topic, because there's so much on this we could talk about.
But Mark, $100 isn't enough, as the S&P 500 is over $3,000 a share.
Well, you don't actually have to buy a full share to invest. My favourite brokers are Fidelity, Charles Schwab and Vanguard. So if we head over to Vanguard's website now and we find the S&P 500, here you can see what companies are in the index fund, so you can buy the right one. So all you have to do is create an account. I already have one, and deposit some money and then click. There you go, job done. The fourth way to invest is in a real estate investment trust, otherwise known as a REIT. I'll also give this a 3 out of 10 on the risk scale. Now imagine your friend collected $100 from 3,000 people. He will have $300,000. Then he takes this money and he buys a property. He rents it out and splits it with all 3,000 people that helped him buy the property, which helps them start generating some of that sweet passive income. That's the basic way of explaining a REIT. It lets everyone benefit from investing in income producing properties without actually buying one. Think of it like buying a small share in a property. Let's say you own the front door, someone else owns the windows, and a few other people own all the bricks, but all together you own the property. Equity REITs own things like offices, shopping centres, apartments, hotels, and much more, and they get their income through the rent. By law, they have to pass on 90% of all profits to the investor, like a dividend. However, they're taxed a little differently. The cool thing is that at the start of 2019, the 10-year average return for REIT ETFs did better than the S&P 500 with an average return of 10%. If you're in the USA, by investing in the VGSLX by Vanguard, you can average a 12% return, which beats the average real estate investor. How awesome's that? As I'm in the UK, I'm going to use the Trading 212 website to put $100 into a similar REIT. It has high global diversification, meaning I can invest in all the up and coming property markets around the world. The next option is buying and selling items. The risk on this really depends on how good you are at finding great deals, but I'll give this a 4 out of 10 on the risk scale. The good thing about doing this is that you can buy and sell something that you're interested in and have knowledge about, which can lead to bigger possible returns. Now I'm going to invest my $100 in either pre-owned radio control model gear or golf equipment. Both of these I've got an interest in, so I should have a reasonable idea of what each item is worth. Pokemon cards would be a great area to have some expertise in, as their value at the moment is skyrocketing. Logan Paul just bought a Charizard card for over $150,000. How mad is that? So I've been on Facebook Marketplace, as most people have access to that platform, and I found myself a model engine that I'm going to go and try and buy. It's up for £75, which is approximately $100 US. We've sent a few messages back and forth, and I'm going to go and have a look at the item now. Hello there, I've come about the engine.
Oh yeah, there you go.
Oh, in the box as well. Cool, that's good.
That is all boxed.
Cool, that looks right. So, would you take 70 for it?
No, I've got to have 75. All this box in good condition.
Can you do a bit better?
I'll tell you what I can do. There you go. I'll throw that in.
Really?
That's what it came out of, 75 quid.
That's a deal.
Okay, we'll do
There you
that.
go, I'll give you 75 quid.
Lovely,
there you
thank
go.
you very much.
We're videoing this for our YouTube channel, do you
Oh,
mind?
No, that's fine.
All right then,
Okay,
see you again.
thanks a lot, bye.
Thanks for that. So, I've done a listing on eBay for the model engine, and the model plane I'm going to actually advertise on a specialised website for model flying, as I'm sure I'll be then selling to the right people and hoping for big profits. Now we're starting to get serious. It's time for individual stocks. This gets a 6.5 out of 10 on the risk scale. There's a certain amount of risk that comes with investing in individual stocks, but if you pick your companies well, then it can be really exciting, as there's the potential to make a lot of money. During the dot-com boom back in 1995, I was really lucky to pick a few great stocks, which I cashed in, and I made a lot of money in a very short period of time. When the bubble burst, some of the companies I'd held on to, which had cost me very little, went completely out of business. Luck and timing can be a very crucial part of stock investing. I picked these stocks using what's called fundamental analysis, which means I looked at the business financial statements, their market, and also the leadership of their companies. Back then this was a lot of work, but now it's easily found out on Yahoo Finance. A while ago I read an article about an experiment where they simulated 100 monkeys throwing darts like this at the financial pages of a newspaper. The stocks the monkeys picked on average outperformed the so-called smartest hedge fund managers on Wall Street. So for this video, I thought it'd be fun to put this theory to the test. I don't have a monkey, so I thought I'd have to do. So I'm going to throw a dart at the board, and as you can see, I randomly selected 20 different stocks, and wherever the dart lands, that's what I'm going to invest in. Now I've just got to put on a blindfold. Okay, here we go.
Oh, you hit it.
Right, let's see what we got. And we've gone into Samsung. Right, so I'm going to jump straight onto my brokerage account and set an order for Samsung. If you want to invest your $100 in individual stock, then Webull are currently giving away 3 free stocks for a limited time when you deposit $100 into your account. I'll just leave the link in the description if you want to pick up those free stocks. So now we're going to be moving into the realm of gambling and speculation rather than investing. Number 7 is cryptocurrency. This is a 9 out of 10 on the risk scale. So you've probably heard of Bitcoin. This is currently the most popular type of crypto. If you'd have bought
$10,000. When I was 18, I had no money and no qualifications, but I did have big ambitions. Instead of worrying about making millions, I set myself the smaller, more achievable goal of making 10k. Now, as a self-made millionaire, I can tell you that first $10,000 was the hardest to make, but once I hit it, everything changed. It wasn't just about the money, it was about proving to myself that making money is a skill and not luck. Once I figured out how to make 10k once, I knew I could do it again and again and eventually scale it into real wealth. So if I had to start from zero and make that first $10,000 all over again, this is exactly how I do it in 3 steps. Most people make this way harder than it needs to be. They jump into crypto because their friend made money from it, or they try day trading because some guru promised it would make them rich. The problem is, both these methods need huge upfront cash reserves and crazy luck. These aren't side hustles, and they should never be seen as your main source of income. Instead, think of them as tools to multiply your money. When you're just starting out, you need something that requires a small amount of money to begin with and constantly puts cash in your pocket every day. When you strip away all the noise, there are only really 4 options. I've tried all of these, and take it from me, this choice is crucial because some options offer higher scalability while others are more limited. In the same way, some generate quick cash while others take more time to make money. Option 1 is selling in-person services. Look, you've probably heard of these before, but I'm talking personal training, delivery driving, dog walking, nail designing, barbering, videography, and so many more. Although these services sound so common and basic, they're actually one of the fastest ways to make money. So don't overlook them, as they give you a way to get paid immediately. It's also pretty cheap to get started. All you need is some skills and maybe a few tools, which means you can get up and running very quickly. If you choose to do this, then please don't mess around trying to build a website, run ads, or make a logo. Just get out there, find some customers in your local area, deliver the service, and get paid. I even did this when I was in my teens. I used to walk around rich neighbourhoods and offer to wash people's cars. I'd look out for tidy gardens but dirty vehicles. Now, this might sound strange. However, I was betting if they were obsessed over keeping their garden tidy, they'd also want a nice shiny car on their driveway to impress their neighbours. Because these kinds of services are limited by your local area, it meant my demand was pretty up and down. Some months were busy, and others I struggled to make anything. When I was busy, I was only able to work with one person at a time, which capped how much I could make in a day. So in-person services are great to get started with, but you can quickly feel like they're limiting your potential. That brings me on to option 2, which is local products. This is selling things like home-baked goods, handmade items, artwork, fresh produce, and much more. This can be a great way to make money, but it's not something that happens overnight. Unlike services where you get paid as soon as the job's done, selling local products takes time. I gave this a go using some of the profits from my car washing business. I bought some cheap model plane parts, then spent some time building each one up, and then sold them to people at the RC Flying Club, which I went to on the weekends. However, I quickly realised I was putting a lot of work in for very little money. This was hard for me to come to terms with because I really enjoyed building them. Most of my earnings were being eaten up by the cost of materials. And on top of that, my customer base was very limited as there weren't enough people willing to pay what I needed to make it worth my time. So selling local products can be fun, and it's definitely worth it if you want to make some money from something you love. Option 3 is global products. This includes starting a clothing brand, drop shipping, sneaker reselling, print on demand, and so much more. Unlike in-person services or local products, going global means you have access to a much larger customer base, which gives you more opportunities to make money. You're not limited to just the people in your town or city. Anyone, anywhere can buy from you. I was so excited about launching my own global products. I even flew all the way to China to partner with a manufacturer to produce my model aeroplane designs and sell them worldwide. Of course, you don't have to do this if you choose to go down the dropshipping or print on demand routes. However, this wasn't really an option when I started. If I'm honest, things started off pretty slowly for me because I had to keep reinvesting my profits back into new products to sell. Every sale required more investment. Once I sold 10 items, I then needed to buy 20 more to keep up. Instead of pocketing the profits, my money kept getting trapped in this endless cycle of restocking. Ultimately, was it worth it? 100%. However, you should only do this if you have the patience to wait 1 to 3 months for everything to start kicking off. So when this is up and running, it is probably the most passive, laziest way to make money that actually works. So that brings us on to option 4. Selling online services. This option wasn't actually possible for me when I was younger, but this is such an advantage nowadays. There are so many different online services you can offer. These include copywriting, video editing, thumbnail design, running ads, social media management. The list goes on. Selling online services actually combines the two biggest benefits from the in-person services and global products. This is because you get the global reach, but the profit margins of a service. With products, you might make 20 to 30% margin that needs to be reinvested. With services, you're looking at 70 to 80% margins that go straight into your pocket. Plus, you can start making money from day one. Look, all of these are fantastic ways to make $10,000 as a student, especially these last two options. However, if I wanted to start making money as fast as possible, then I'd go with option 4, selling online services. So now we need to figure out exactly what online service to offer. So start by asking yourself 3 questions. What are you really good at? What do you enjoy learning about? And what problems do businesses consistently struggle with? The sweet spot is where your answers overlap. Most people get stuck at this stage as they spend months or even years trying to perfect their skill before offering it to anyone. That is totally backwards. You need to start getting real world experience as quickly as possible. So start by setting your prices under the normal market rate. Your main aim here is to earn and learn at the same time. Now let's take this one step further. This is the skill pyramid, made up of 4 elements that when mastered together transform a high income skill into a $10,000 income. Miss just one and you'll stay stuck at the bottom, working hard but never breaking through. Element 1 is positioning. You see, not all online services are equal. The real money is in offering to help businesses make more money. That's because businesses think about money differently to individuals. When a business is making $50,000 a month, spending $2,000 to solve a problem isn't a big deal, as long as it helps them make more money. And take it from me, they have a lot of these problems. They need more customers, they need better systems, they need to stand out from their competition, and they need to convert more leads into sales. These problems never go away, and businesses are always willing to pay to solve them. On top of this, some industries simply have more money to spend than others. And if you think about how you can reposition yourself, you'll start making real money faster. Here are some ideas to get you thinking. Instead of being a video editor for small YouTubers, you could edit videos for an entrepreneur who sells a product. If you make random thumbnails for clients, you could instead aim to become the main designer for an established creator. And if you're a copywriter, don't write cheap articles. Instead, focus on optimizing landing pages. This isn't about learning more skills. It's about putting yourself where the money's being made. Element 2 is leverage. You'll never make $10,000 without leveraging value over time. Businesses don't pay for effort, they pay for results. If you stop charging for the hours you work and instead for the return on investment you provide, you'll instantly make more money. Let's say you choose to run Facebook ads. If you charge per hour, you're stuck with a fixed rate and the client will always want to keep your hours low. But if you charge based on the money you bring in for the business, suddenly they're not thinking about cost, they're thinking about profit. And when they see that your work is directly making them money, they'll happily pay you more for it. The same goes for if you decide to offer social media management. If you just schedule posts and reply to comments, you're replaceable. But if you can prove that your strategy is bringing in more engagement, more leads and more sales, you become a valuable asset, not just an expense. Trust me, the moment you shift your pitch from what you do to what they gain, you'll find a lot of people are suddenly willing to pay a lot more. Element 3 is reach. One of the biggest mistakes people make when starting out is thinking they always have to chase clients, but that's not how the game should be played. Right from the start, you need to be thinking about how to make clients come to you. Recently, I was looking for a graphic designer for a specific task, making movie-style posters. So the first thing I did was look on TikTok for people who made these kinds of designs, and one person dominated the search results. So I reached out to him and asked him for his prices. He told me he was just posting some of his designs for fun on TikTok. He wasn't even doing it as a side hustle, so politely declined. However, his videos kept growing in popularity and his inbox was flooded with DMs asking to work with him. A few weeks later, he reached back out to me asking how to start getting paid. I helped him set up a proper business and now he works for me and many other clients. This just goes to show that you should always be putting your work out there online, even if you're just starting out or just doing something because you enjoy it. You never know what opportunities might come from it. So if you edit videos, show before and after clips to highlight how much better your edits make the content. If you design thumbnails, explain why your design got more clicks. And if you're learning social media, document how you're growing an account from scratch. Element 4 is automation. 95% of people that try to start a side hustle or business fail before they even really get going. Here's why. After working with countless copywriters, thumbnail designers, web developers and video editors, I can tell you that 95% of them promise to deliver on time, then completely miss their deadlines. The thing that will make you stand out the most isn't talent or charisma, it's reliability. And overlooking this is the biggest mistake young people make when starting out. The people I've ended up paying thousands to aren't always the best at what they do, but they're the most organized. They never miss deadlines, they always communicate clearly, and they make working with them effortless. So take it from me. Being good at what you do is one thing, but being reliable is what gets you paid again and again. So how do you do this? Well, the most successful people I know don't rely on memory or messy notes. They use automation. And if you're thinking about making money online, you need something to help you keep track of everything. That's why I recommend using a CRM system. Odoo CRM is great. It helps you remember who you talked to, what they wanted, and what you need to do next. Instead of scrolling through emails or DMs trying to find what the client said, everything is in one place. I mean, you can visualize all your opportunities with this cool board, which helps you see the expected revenue at each stage, so you know where to focus your efforts. You can also use it to schedule calls and meetings effortlessly. Plus, with your emails, notes and files all in one place, staying organized is very easy. You can use it to easily track your clients and projects so you never miss a deadline. You can set reminders to follow up with people so you always look professional. At the end of the day, clients don't just want someone skilled, they want someone they can count on. As I was planning on talking about them anyway, I reached out to Odoo to see if they wanted to sponsor this portion of the video, and they agreed. They also offer your first application completely free with unlimited support and hosting, so if that interests you, I'll drop a link in the description. I don't care how much money you make, until you see at least $1 million in your bank, you shouldn't be wasting it. The supercars, the designer clothes, the nights out, none of it matters unless you can turn your income into long-term wealth. The rich see their income as something to spend, whereas the wealthy use it to make more money. So how do you do this? Well, you need to start investing. In front of me, I've got a risk scale, and I'm going to walk you through the 4 key areas where I put my money, starting from the safest investments all the way up to the highest risk plays. Remember, I'm not a financial advisor. I'm just sharing what's worked for me over the years. Let's kick this off with my high interest savings account. They call it a high interest savings account, but honestly, at 3%, I have no idea how to get away with that name. Now, sure, you can find better rates if you're willing to lock your money away for a set period or agree to strict deposit limits each month. But I don't want my savings held hostage. I want multiple shops and warehouses. Then, almost overnight, the internet made it irrelevant. I had 2 choices: give up or adapt. You know me, I wasn't about to quit. So I threw myself into learning everything about making money online. And like most people today, I fell for the hype. I tried every method out there, and guess what? None of them were as easy as people said. But through trial and error, I cracked the code and rebuilt my businesses, but this time with the internet at the core of my strategy. Fast forward to today, and making money online isn't just important, it's an essential thing everyone should be doing. That's exactly why I'm making this video. I've spent years testing, failing and refining, losing millions, making millions, and learning what actually works. Now with this knowledge, I can help you avoid all the mistakes and fast track your success. So if you're tired of false promises and ready to commit for the next 6 to 12 months and build something real, this is for you. No gimmicks, no BS, just the process that actually works. All right, so this is the online wealth wheel. And whether you realize it or not, you're already on it. There are 3 main stages that define where people are in their journey to making money online, plus a secret 4th stage that only a few ever reach. We'll discuss that one at the end. Let's kick things off with stage 1. This is where everyone starts with no side hustle. And sadly, 55% of people never start at all. Inflation is making everything more expensive. And let's be real, relying on a single paycheck is more dangerous than ever. So if having a side hustle is essential, why do 55% of people still avoid it? Because the online space is a jungle. It's full of ads pushing proven methods that confuse more people than they actually help. The key to starting the right way is picking a method that suits your skills, budget and lifestyle. If you already have a skill like video editing, graphic design, coding, or even setting up Discord servers, people pay great money for these services and there's no shortage of demand. But what if you don't have a skill to sell, or quite simply don't want to deal with clients? That's where product-based businesses come in. One of the best options is selling products online without ever holding inventory yourself. But I'll get into this in more detail later on. That brings me on to running a failing side hustle. I'm classing a failing side hustle as earning less than $50 per month online. Sadly, 28% of people are trapped here. A lot of people aren't going to like me saying this, but it has to be said. It's almost never your side hustle that's flawed or doesn't work. You're most likely just not putting enough time and effort in. I know that can be hard to hear, but this isn't really your fault. It's down to something called shiny object syndrome. This is when you constantly jump from one trendy online money-making method to another without committing and putting your absolute all into any of them. One week it's drop shipping, then print on demand, then selling books on Amazon KDP, then trading stocks, and then starting a social media agency. The truth is, all the online money-making methods I just mentioned work, but each requires a different level of time commitment, and you'll never get anywhere by jumping from one to the other. It's like that classic diagram of miners tirelessly digging for gold, only to give up just before striking it rich. Instead of pushing through, they abandon their progress, start fresh somewhere else, and waste all that initial effort repeating the cycle over and over again. If you get stuck in this dangerous pattern like the 28% of other people, then you need to recognize it and simply pick a method and stick to it. Forget the idea of a perfect side hustle. Just pick one that's easy to start and has the potential to scale. If you don't have a high income skill to sell, then I'm going to make this super simple for you. In all my years of experience, the thing that has made me the most amount of money online is e-commerce. So I recommend you focus on that, but not in the way most people do. A lot of beginners assume starting an online store means dealing with inventory, suppliers, or complex setups, but that's not the case anymore. That's because you can now utilize AI-built Shopify stores. Instead of spending weeks setting everything up like I had to back in the day, you can now use a free tool called buildyourstore.ai to launch a fully automated store that would normally cost $200 to $300 to set up, but this does it for free in a matter of minutes. You just enter your name and email, pick a niche like fashion, tech or pets, and the AI chooses winning products, designs your store and makes it look professional from day one. If you want to go through this process completely for free, then just click the link in the description and it'll walk you through everything. From there, it syncs directly with Shopify, giving you exclusive access to a 3-month Shopify trial for only $1 per month. But what about making sales? Well, the biggest mistake people make with e-commerce is giving up too soon. Surprise surprise, surprise. This is probably because they don't want to deal with inventory or fulfillment. That's why the free AI Store Builder also walks you through how to integrate a tool called AutoDS, which is kind of like the autopilot system on a plane. It imports trending products, updates pricing and images, and even ships orders directly to your customers. This means you don't have to touch inventory, package anything, or deal with supplier negotiations. You focus on driving traffic and making sales while the system handles the rest. Full disclosure, AutoDS are long-term supporters of this channel, but even if they weren't sponsoring this portion of the video, I'd still recommend them. You can easily create a buzz around your products by creating videos about them on TikTok for free. If you get 100k views and just 1% of the people go and buy your product for $10, then that's $10,000 in revenue. So if you're serious about breaking out of the failing side hustle trap, then choosing a simple automated model like this gives you the best chance at success. No more bouncing between business ideas, just commit, launch, and put in the work to scale it up. Stage 3 is running a successful side hustle. Believe it or not, only 16% of people who start making money online ever make more than $50 per month. The people in this percentile make anywhere from $51 on the low end all the way up to $10,000 a month. Of course, the higher end is what I'd consider actually successful. So what are these 16% of people doing differently, and how can you start applying it to yourself? Well, there's some clear things that I've noticed that separate the people who struggle from those who actually make money online. And to help you get there, I'm going to break them down into 4 key steps that you can follow. Step 1 is to stop trying to appeal to everyone. You might think casting a wide net will get you more sales, but in reality, it does the opposite. If you try to appeal to everyone, you'll appeal to no one. So before you even start promoting your store, grab a notepad or open your notes app and describe. Look, if anyone tells you that, never believe them. They're probably just trying to sell you one of those courses for $997. So even though there's no magic ball that can tell you when to buy a stock before it rockets in value and makes you a millionaire overnight, there is certainly a few things I do to tip the odds in my favour, and that's what I'd like to share with you guys today. As I've got older and slightly greyer, I've found that knowing the reasons behind why a stock might change in price has helped me make and save a lot of money. If you're new to the stock market, then a stock is a small part of a company, and when you buy it, you actually become a part owner. The idea is to buy parts of a company that you believe will go up in value, so you're able to multiply your money without doing any extra work. But let's face it, investing in the stock market can be pretty confusing, and most people just pick companies on a whim. However, that's not how I do it. So by the end of this video, you'll know my actual strategies for picking great stocks. And don't worry, I won't be trying to sell you anything, so you can just sit back and relax. So there are 2 main ways to attempt to predict the stock market. These are called technical and fundamental analysis. A good way to think about this is like a scale. Usually short-term day traders are purely focused on technical aspects. These include looking at charts and patterns. They believe that they can predict how the stock will change in price by judging the highs and the lows on the graphs. They're the geeky ones. Nah, I'm only kidding. It's just not how I do it. My whole investment strategy is about keeping it simple. Lots of people talk about using margin and options, but that's really not something I worry about. I'm a long-term investor, so this means I'm a lot more focused on the fundamentals of a company. This includes the financials, the leadership, and the brand recognition, as I believe this is where the information lies to indicate the long-term success of a stock. However, like I mentioned, it's a scale, so I do cast my eye over the occasional chart in order to find the best time to buy. This approach has helped me to find some really good investments over the years, rather than just dipping in and out and trying to make a profit on a daily basis. The amazing thing is, the majority of professional traders are still unable to beat a low-cost index fund over the long term. This may sound quite complicated, but it's actually very simple. So this bucket represents an individual stock, and the water is me pumping all of my money into that company. This represents an index fund, each cup being a different company. And the water I'm putting in is the money I'm spreading between each of them in one easy investment. For whatever reason, if this company goes bankrupt, then guess what? All
my money goes down the drain. Now this is the same company and it still goes bankrupt. But the good thing is I may lose my money in that small investment. However, I've got so many more stocks and I've done really well in some of them, which means I've actually made a profit overall. My favourite index funds track the S&P 500, which are the top 500 public companies in the USA.
So even though the majority of my money goes into index fund investing, I also have a lot of fun picking individual stocks and watching my portfolio grow. On this note, if you'd like an easy way to get started, Public are currently giving away a free stock worth all the way up to $50 when you fund your account. If you want to pick that up, I'll leave a link in the description. And if you're in the UK, Freetrade are giving away a free stock that could be worth up to £200 when you deposit as little as £2. I'll leave that link below as well. It's a great way to get started with individual stocks and basically it's free money. Right, so now you got your free stock and you're ready to invest into some more. But where should you start? Well, if you're anything like me, it makes sense to start with the numbers. We call this quantitative analysis. Whenever I'm thinking about investing in a company, I make sure to look at all these figures first. If the financials don't look good to me, then it's very rare that I'll do any further research into the company. It's kind of like when you go on a first date with someone and they seem really nice. However, it isn't until you really start getting to know all the details about them that you might start to notice their flaws, like eating with their mouth open or picking their nose. If only they gave you a non-biased, comprehensive list of how they actually are, so you can make an educated decision whether you want to date them or not. I don't have a solution to this problem, but luckily that's exactly what companies do. It's brilliant. You can find out this information for free on Yahoo Finance, which is the website that I use. There are three main aspects that I look at. First, let's break down the balance sheet. I know it doesn't sound too interesting, but trust me, this is where you find some of the real juicy information. The whole purpose of this sheet is in the name, to balance assets and liabilities. Think of it a bit like this. You may own a watch or a rental property, and these are your assets. But let's say you have loads of credit card debt. This is one of your liabilities. So let's break down some of the gobbledygook terms so you can easily understand this complicated looking sheet and impress your friends. Assets are broken down into three categories. Current assets are things that can be turned into cash within 12 months. Longer term assets are things like their headquarters, which they usually don't sell in a hurry. Companies can also have assets that you can't physically touch, known as non-tangible assets, such as the brand recognition of an established business that has been trusted for generations. I like to think of Coca-Cola. And then we come to the liabilities. And what I'm really interested in here are the current liabilities, as this is the debt that they'll need to repay within 12 months. With this, there is a simple calculation you can do to easily know if the company is high risk or not, and that is total current assets divided by total current liabilities. A good rule of thumb here is the number should be above 1. But how does this work in practice? Let's take Apple's balance sheet for example. Apple's total current assets divided by their total current liability comes to 1.4 when rounded up. This is great, as now we know that Apple are able to pay off all their short-term debt nearly 1.5 times. The second document that's really important to have a look at is the income statement. If you've ever heard the saying of the top and bottom line, this is where it comes from. At the top of the statement, this is the total revenue, which is the total the business take, and at the bottom is the net income, which is the money the company makes after all the expenses have been deducted. Every business has these expenses, the cost of operation and the cost of revenue. So let's take a simple business like a smoothie company. Their cost of revenue is fruit. They can't make the smoothies without buying that. Therefore, that is a cost they have no choice about. It's a simple fact of running their business. But the next thing they do have a choice about, which is their operating expenses, who they're hiring and what kind of wages that they're paying them. After these expenses are deducted from the total amount of money they take from their customers, you get the operating income. So here's my simple calculation that lets me know if the business is healthy. Operating income divided by total revenue times 100. Ideally, I look for above 15%. Using Apple again, let's take this number, divide it by this number, and we get 27%, which is great. The last one of the big three is the statement of cash flow. I'm not going to spend too much time on this one, as when you boil it down, it's pretty simple. The main thing I look out for is if the company I'm investing in has increasing free cash flow year on year, which is money they can use to reinvest or pay back to investors. A big red flag here is sometimes I see the cash flow is negative, but the company is still paying dividends back to its investors. It's just unsustainable, and eventually the business is just going to run out of cash. Now, once I've had a good look at all these numbers, it's time to get into the juicy stuff, and that's all about analysing the qualities of a company. This is known as qualitative analysis. One of the qualities I look for is brand recognition. When I say the word Apple, most people think about the company rather than the fruit. I know I keep referring to it, but it's a great example of amazing brand recognition that won't be going away anytime soon. Being a household brand name comes with a lot of consumer trust, so when they launch a new product, people are much more likely to try it out, especially if it's something unique or groundbreaking, such as the iPad.
And we'd like to show it to you today for the first time. And we call it the iPad.
This helps companies like Apple shape